Before, I used to think trading was about finding those setups from stacked imbalances, delta divergence, absorption, VWAP, and all those trading setups you see on the internet every day. So, like here, for example, for value gap sweep, you might know what this indicator is. So I don't want to mention the name, but just to give you a whole idea, I kept just searching for the perfect signal, just trying to make them all uh, kind of sorted out together so I can get a good trade maybe. But I was missing the bigger picture in trading. I didn't learn until I spent so much time on the market. And if you're still new, that's going to be a really, really helpful for you. So most traders use the order flow like an indicator. They see a positive delta and think, oh, there's maybe more buyers than sellers. Maybe I should go bullish. They see imbalance. They think, oh, these guys are strong. Like many orders happening, like maybe a lot of buyers, maybe a lot of sellers. Yeah, let me enter. They see an absorption. Oh, damn, that's a reversal. But the order flow alone means nothing without the context, okay? You need to understand the whole image, the whole thing. You need to understand exactly what is happening before getting into a trade. Because if you don't understand exactly what those conditions are, trust me, you'll just be missing out a lot on the market. So my trading actually changed once I stopped asking, where is my setup? Or when's this setup that I saw on the internet 2 days ago happening? When is my view up gonna tell me sell or buy? When is the trap traders, delta flip, delta divergence, all those delta setups, the POC setups, when are they happening? I want to take my trade. But once I started asking, what is the market trying to do? When I started trying to understand the market in general, not just looking for random setups as if I'm a gambler, that's when my trading changed. That's when I learned that I was doing something wrong. Because what you need to understand exactly what the market is doing. Like you cannot just go to a place and wait for something to happen. You need to get the vibe, get understand the atmosphere. Let's say I'm gonna give an example. If you go to a party, you wanna meet a girl, you won't just go to the party and wait for her to appear at an exact moment, then just go. Oh yeah. So my setup is once she passes by, I'm gonna go talk to her. Well, you need to check the vibe first, the atmosphere. Was she looking at you? Is she with somebody? Is she looking at somebody? Uh, you shouldn't just go directly into her. And that's the exact same thing. Sorry for the stupid example, but that's the one you would get the most because I know you guys, okay? That's the example that would really, really, really get into your brain. So just think of it like this. You won't just see the delta flip happening and think, oh, that's a delta flip. I should buy or sell. Oh, there's a lot of imbalances. Maybe that is my time to sell or buy. Like, come on, more buyers than sellers, isn't it? That's what the guy said on YouTube, on the internet, right? No, it doesn't work like this. You should start asking yourself, what's the market doing? Who's stronger? Who's weaker? Who's losing the position? Who's becoming weaker right now? What is actually happening? What the F is happening in this market? And trust me, that's when your trading is going to change. Because it's just an auction in the end. The price moves higher to find other sellers and they moves lower to find buyers. So I think here the market just went lower for no reason. I mean, it kept going lower because all those buyers were not interested. You wouldn't buy potatoes for $50 a kilogram, right? But you would buy them for $1. Then that is the same thing. The price was $50 here. Does anyone want to buy? No. Okay, 40. Do you want to buy? No. 30. Do you want to buy? No. 20. 10. Okay, 1. Yeah, want to buy. Then all those people get in with millions of contracts. And boom, the market goes up again. Keeps going. 70, do you want to sell? 80, do you want to sell? 90, do you want to sell? Until there is someone who wants to sell. And then boom, all those sales gets in and the market starts going down again. That's simply the setup of the market. But it's more complicated than easy said. It's not like this at all. Yeah, I make that look easy, but the whole setup is actually so I mean, not really complicated, but at least logical and understandable. Because if those setup would get your money, then those whole institutionals wouldn't just play with you and let you take money from them for no reason. They would just do the against thing of what those indicators will tell you. If the indicator is telling you sell, well, they will go and maybe buy to make the market go up, get you stopped, and then that's what happens. It happens to you every time, right? You can just let me know in the comments. Just type one in the comment if it happens to you. So every move is literally driven by supply, demand, participation, and of course liquidity. And they're all together in one word, which is liquidity in the end. So the move is just driven by demand. If there's no demand, the market is not gonna go up. If there's no supply, the market will keep going up. If there's no demand, then it's gonna keep going down. That's all. And your job is to look for the supply and the demand and look for what each one of them is doing and then get your position in as soon as possible. So also I want to make a point about aggression, which is simply you see it in imbalances and big deltas. For example, for aggressive buying, it does not always mean it's bullish. Sometimes there are trap traders, late traders, and someone buying directly into supply. So if price cannot continue higher despite aggressive buying, someone larger may be absorbing everything. And maybe that's potentially a selling point. But don't just think it's bullish, okay? And don't just think it's bearish, okay? Just try to analyze the whole thing together. I'm gonna make a big series about this so you can guys get into it, because I don't want to see you guys wasting the big opportunity of trading the footprint, the order flow, before it becomes a really big thing. Because trust me, it's gonna become huge one day and all of you will be regretting not getting here inside. So as long as you have dumb traders like you who are trading dumb stupid indicators now, then switch, become smarter, and then those guys who will keep being dumb for 2-3 years. Once they get to this, we have already grinded a lot, we've made tons amounts of money, we did a lot of things together maybe. So stop being dumb and trade the order flow, the depth of market, the liquidity. That is the only thing that's gonna make you rich in trading, man. Stop trading price action. That's not gonna get you anywhere at all. Stop following those guys, those gurus, those course gurus that tells you, oh, come on, yeah, I went to Dubai, I went to this, I went to this, by trading SMC. Come on, man, that's 2026. Stop dumping people. Stop stupidizing people. We need to invent a word for this. So the context matters more than signals. A setup by itself is meaningless. The same imbalance can start a trend, fail instantly, and trap you all on what we call a failed breakout. Oh my god, I got stopped. Why? Institutionals know what's gonna happen. They just get you stopped. They know where the stop liquidity is. They'll just go hit it and then make the price go down. That's what they do all the time. So context makes the difference though. Just ask yourself, where are we in the auction? Who's in control? And is price being accepted or rejected? So this is very important. Please focus with me here. Instead of memorizing those setups, think about where sellers may become active, where buyers are trapped, and where liquidity rests, where price becomes inefficient. So think of it as a market, and you're trying to find out the price based on how many people want to buy a certain product. Okay, so imagine you go to your local market, you want to buy potato. Okay, let's say potato today. Why not? That's a good thing. I like it. Sorry. So think of it as a market, potato market, and you're trying to find out the price based on how many people want to buy potatoes. So there's you, there's your neighbor, there's your aunt, there's maybe someone else, there's people from the other neighborhood, and there's only one seller, okay, with low quantity. You guys want to buy 10 kilograms, he only has to offer 5. Okay, you guys are 5, you guys are 10. Each one wants a kilogram, but you only can provide 5. What is he going to do? Raise the price. Simple as that. That's the basic law in economics. If you don't know this, sorry, you need to leave trading. That's the basic law of economics, of the whole world. If you have more demand than supply, that means the price will go up. If you have more supply than demand, Okay, imagine you had 10 kilograms and only two people wanted to buy 1 kilogram. So those potatoes gonna stay there the whole day. So what is he going to do? Okay, I'm gonna just make it cheaper so I can sell it today. I need to get rid of it today. Okay, just half a dollar. Then it's gonna be sold later. And it is kinda the same thing. Contracts being sold at the top and being bought at the bottom. You should see these zones at the time. Oh yeah. You should note these zones and the time the sell and buy happens. Okay, just note those zones. Like understand where it's going to happen. There's a supply zone and the demand zone in every swing trade. Okay, in every swing market, you need to find this zone and then try to notice what happened when the market goes there. Is selling happening? Is buying happening? Then boom, take your position and you're with the institutionals. So our goal is to trade with those institutionals. That's it. So we'll move to the last part of this video. Stop predicting using setups because not every market condition is the same, and start analyzing the market by yourself. Understand it because supply and demand is all you need. So thank you guys for your time. Sorry if I was a bit harsh with you today, but I hope the idea got to you because it's very, very, very important. And please do let me know if you have any questions. Make sure to subscribe, leave a comment, and like this video if you like it. And share it with your dumb friend who still uses candlestick charts in 2026. So thank you and have a great time.